Good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the current market events with key focus on what happened last night with the Fed and the FOMC press conference. And then from there, we will look at the economic calendar, try to understand what are the key events that we're expecting today. And once we understand that, we'll do some technical analysis to understand the key developments in major pairs, the key developments in major equity indices. And of course, we also be looking at a couple of commodities, including gold, silver, and oil. And once we cover this session, hopefully everyone will trade from an informed perspective. So as usual, I'd like to begin with a disclaimer. This session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. This is purely educational. So let's get things started. And good morning, Malombe. Thank you for joining. Good morning, Molenga. Thank you guys for joining. So let's get things started. First of all, we'll be looking at the economic calendar. I'm hoping everyone can see this. So this is Thursday, but before we look at Thursday, let's go for the full week with key reference to what happened yesterday on Wednesday the 12th. So first, at around 3:30 p.m., we had CPI data coming in from the US. So for those who are new, CPI is short for Consumer Price Index, which is an index that is used to estimate the inflation in the US economy. So in this case, we saw inflation dropping from the previous reading of 3.4% down to 3.3%, and this is annual inflation. So it's still quite a distance from the Fed's target of 2%. So on the month, there was no change in the price of basket of commodities. So in this case, the price of the same basket of commodities that are consumed by the average household in the US did not change in price in the last 1 month. So we were expecting a 0.1% increase, and the previous change was 0.3. So these showed that prices are easing up, meaning that they are not moving as fast, but they are still significantly high, especially when you consider that the average American price since 2020 is up about 25% or 20 to 25%, and this is considered to be very tough on individuals as the individual budgets are affected by higher prices. So core CPI was up 0.2%, also slower than expected. We were expecting a 0.3% increase, which was similar to the previous increase, but in this time we got 0.2%. So to be clear, core CPI is a measure of the same basket excluding food and energy prices, which tend to be more volatile than other CPI commodities. So core CPI is more stable in terms of trying to estimate the level of inflation in an economy. Then we also had crude oil inventories at 5:30 p.m. So crude oil inventories came in at 3.7 million, and this was a big jump from a previous reading of 1.2 million. And of course, we expected negative 1.2 million, meaning that the inventories are building up. And in this case, the way we interpret the inventories data is that an increase in supply of oil basically implies that prices should be going down. Of course, if there's a decrease, then we tend to see prices moving up. So oil prices took a step backwards as a result of an increase in inventories. So on the CPI side, lower inflation means that the Fed is getting closer to its target of 2%. So in this case, drop in inflation was interpreted as something that might add pressure to the Fed to cut interest rates, and as a result, we saw the dollar weakening. So remember, cutting interest rates have a direct impact on the dollar and is expected to weaken the dollar. So the CPI reading was seen as an attempt by investors to front-run the Fed. So in this case, seeing inflation dropping, then out of investors went ahead and sold the dollar. So we saw the dollar making big spikes, being really down. And of course, the potential for cutting interest rates is positive for the stock market. So we saw the S&P 500 and the Nasdaq breaking into new all-time highs. So later on in the day, we had the interest rate decision where out of analysts were expecting that the Fed would not change interest rates. From the CME Fed Watch tool, we had a 94.1% probability that the Fed will not change interest rates. So the announcement was no surprise. It came in at 5.5%. But then the surprising matter was the FOMC press conference that happened later at 9:30 p.m. Of course, we also had the federal budget balance, which added more deficit spending. So in this case, we saw a drop to negative 347.1 billion, meaning that the Biden administration is still drunk with spending more, even more cash in the economy, while the Fed is struggling to fight inflation. So the FOMC press conference key highlights were as follows. So one, the Fed dot plot is now estimating that there will be only one rate cut this year and 3 more rate cuts next year. And inflation projections for the year were revised higher, meaning that the Fed doesn't expect to achieve the 2% target within this year. So in this case, we could also be seeing the Fed dropping the idea of cutting rates entirely, especially considering that at the beginning of the year, we had seen projections of 5 to 7 rate cuts, but now it has dropped to 1, which means that there's less confidence that inflation will get to the 2% target before the end of the year. So after the FOMC press conference, what we saw is a reversal of prices. So while the dollar was weakening as a result of the CPI, the hawkish Fed, basically considering holding rates higher for longer, led to the recovery of the dollar. And this morning, we are experiencing just that in the markets, where the dollar is making some strides backwards to recover the losses it had made in the afternoon. And one of the key highlights for the day is USD JPY, which has already managed to fully recover from the sell-off yesterday. So today, this morning, we've had data from Australia. That is the employment change and unemployment rate. Of course, you can see that the number of new jobs created was 39.7K, which was higher than the previous reading and higher than the expectation, showing that the job market is strong in Australia. And the unemployment rate dropped from 4.1% down to 4.0%, showing the strength in the Australian economy. Of course, this is expected to be quite positive for the Australian dollar. So the focus today, towards the end of the day, of course, we have the industrial production data from the Eurozone at 12 p.m., though it's expected to be low impact. But then the high impact news for the day will be the core producer price index, which is a further measure of inflation within the US. It measures the price of finished goods and services that are sold by producers. And of course, we know the distribution chain. So once producers sell their goods, eventually these goods find their way to retail. So by the time they get to retail, then those prices are forwarded to the economy. So in this case, it's a forward measure of inflation showing what the near future holds for Americans. So in this case, the previous increase was 0.5%. We're expecting a big slowdown to 0.1%, whereas for core producer price index, we're expecting a drop from 0.5 to, in this case, 0.3%. So with that in mind, looking at these two data points, so they might go ahead and cement the idea whether the Fed is confident that inflation will drop to 2%, or also they might change and reduce the confidence. So in this case, a strong PPI, let's say higher than expected, would mean that prices will keep going up. The Fed might hold rates higher for longer, and that is expected to be quite positive for the dollar. However, if there is a better than expected drop, let's say it comes to 0.1% or below, and while core comes to 0.3% or below, then that should indicate that inflation will likely drop in the next month. And as a result, we should be expecting to see the dollar weakening again. So that's the interpretation of the producer price index data. And of course, we will be having a speech by Treasury Secretary Janet Yellen at 7 p.m. So this also has the potential to cause some movement in the US dollar pairs as well as US equity indices. Of course, there is a lot of speculation concerning the Bank of Japan interest rate decision, which will be happening tomorrow morning before the next market snapshot. Remember, market snapshots happen every day, Monday to Friday at exactly 11 a.m. So the Bank of Japan is expected to hold rates at positive 0.10%. Of course, it can be less than that, but this is the upper limit. So The monetary policy statement will be released at a similar time. So we should be expecting to see some volatility in JPY pairs tomorrow, whereas today we could be seeing some sideways momentum or even some preparation for the news tomorrow. So monetary policy statement at the same time and the press conference later in the day, maybe past 7:30 a.m. So on the press conference, investors will be focusing on the potential monetary policy of Japan, what the Bank of Japan is looking at, and whether it's looking to continue hiking interest rates towards the end of the year. So that will be a key focus, especially for JPY traders, and that summarizes our highlights for the day. So besides that, if we look at some of the key highlights from yesterday, the Federal Reserve left rates unchanged at 5.25% to 5.50% for a seventh consecutive meeting in June 2024, in line with forecasts. So policymakers do not expect it will be appropriate to reduce rates until they gain greater confidence that inflation is moving sustainably towards the 2% target. So meanwhile, the dot plot showed policymakers see only one rate cut this year and 4 reductions in 2025. So this is the key highlight of yesterday's meeting. And if, as long as the market is expecting just one rate cut, then the overall expectation is that we see the dollar remaining strong for the better part of this quarter. So we should be seeing other central banks, which have already implemented rate cuts, face challenges facing the dollar because we could be seeing more investments into US treasuries. So the carry trade becomes more pronounced as we see more divergences between central banks and the US Federal Reserve. So the Japanese yen weakened again past 157 per dollar, siding toward 2-week close as caution prevailed ahead of the Bank of Japan's policy decision at the end of the week. So the Bank of Japan is widely expected to leave interest rates unchanged, but traders will focus on whether the central bank will announce a reduction in its monthly bond purchases. So Bank of Japan Governor Kazuo Ueda reaffirmed last week that the central bank will gradually scale back its huge balance sheet, although the timing remains uncertain. Meanwhile, former BOJ board member Takahide Kyoichi said the bank is likely to maintain its flexible bond purchase program as a fine-tuning tool to allow itself the ability to combat both upside and downside risks to growth and inflation. Of course, it will be a big day tomorrow for JPY traders. And as we have seen, the main focus is on the quantitative easing to try and see whether the Bank of Japan will continue to buy bonds or whether it will stop and now focus on hiking rates as a central policy. So for Australia, we've already seen the data. So Australia's seasonally adjusted unemployment rate inched down to 4% in May 2024 from April's 3-month high of 4.1%, matching market forecasts. So the number of unemployed individuals fell by 9.2 thousand to 598.9 thousand, which is still nearly 110,000 fewer than before the pandemic, as people looking for part-time jobs dropped 18.7 thousand to 199.6 thousand, while those seeking full-time jobs added 9.6 thousand to 399.3 thousand. Meanwhile, unemployment increased 39.7 thousand to 14.4 million, surpassing the consensus of a 30,000 gain and above a 37.4 thousand rise in April. So you can see the key trend here, the number of new jobs created. So looking at the past 1 year, you can see it's a gradual trend where the number is increasing after bottoming around July 2022. So we could be seeing further drop. So for the unemployment rate, it was a drop to 4%. So it was a gradual increase, but in this case, a small slide down to 4%. So among other highlights, crude oil futures fell toward $78 per barrel on Thursday, retreating from 2-week highs as EIA data showed that the US crude oil inventories increased by 3.73 million barrels last week, the most in 6 weeks, and defying market expectations for 1.55 million barrel draw. So US gasoline and distillable stocks also increased more than anticipated. Moreover, the Federal Reserve signaled only one interest rate cut this year, which could come as late as December, despite cooler than expected US inflation figures for May. So higher borrowing costs could dampen economic growth and energy demand. Meanwhile, investors monitor developments in Gaza after Hamas indicated optimism in ceasefire negotiations with Israel. Still, Houthi militants continued their attacks on the Red Sea, shipping in solidarity with Palestinians, taking responsibility for recent small watercraft and missile attacks. So we all know what has been happening in the Red Sea. So with the destabilization of transport along the Red Sea, we have seen a lot of ships having to move around Africa, which has added a premium on the price of oil as well as the delivery times. So that has added more pressure for oil to be moving on the upside. So despite the slight drop we saw in oil yesterday and this morning, we are hopeful of a recovery as a result of increased demand and, of course, the OPEC cutting output and the destabilization of the supply lines. So those are the key highlights for the day. And now we can safely move into some technical analysis and try to understand some charts. So I'm seeing a good comment here. It's in addition to what's currently happening. So Tesla annual shareholding meeting, Elon Musk share pay back. Do we expect some good volatility in Tesla stock? I wouldn't say it's a good volatility. It's basically the shareholders voting to approve a deal that was agreed previously to pay Elon Musk over $5 billion in compensation for driving the company to a higher valuation. So in this case, we are expecting that if the payment is made, then there is that probability that Tesla stock could go down because it's a stock-based compensation. So it's more like diluting the shareholders. So that may explain why there was quite a number of shareholders who are against the idea, because if you're paying Elon Musk $5 billion, then that takes a big chunk of the company's earnings towards one person rather than towards the entire shareholding. So as we continue, if you have more questions or comments, feel free to write that in the comment section, and I'll be responding to that on the go. So if you're watching this on Twitter, remember to like and share the video. If you're watching on YouTube, like, share, and of course subscribe so that we keep delivering more quality content to you guys. So make sure you don't miss a single market snapshot every day, Monday to Friday at 11 a.m. So on the next part, let's jump straight to the charts. So I'll be sharing my MetaTrader 5 trading application, which is the main app that we use for trading. If you trade on mobile, I recommend that you use the Equity Trader. This is the FX Pesa trading application, and that should help you approach or access the market at all times as long as you have a smartphone. So hello, J Squad, and thank you guys for joining the session. So let's get straight into technical analysis. So I'll be starting with the dollar index. So as I mentioned yesterday, after the CPI report, this is what we saw, a big drop in the dollar index. Then after the FOMC press conference, this is what we saw, a recovery towards this area here. After the Fed basically showed that it could continue holding rates higher for longer, which is quite positive for the dollar. So this has been reflected across board. So for the Euro USD, we have seen 3 major moves. So one is last week, the Euro making a big downfall as a result of the European Central Bank cutting interest rates. Then yesterday, we saw this happening, the Euro gaining back against the dollar after the CPI data. And then after the Fed meeting, we saw the Euro now taking some step back against the US dollar. So if you look across board, dollar trading against the Swiss franc. So the first move here was when the Swiss National Bank basically cut interest rates. Sorry, it was all the way down here. So what we saw here is a big drop followed by some form of recovery. So the big drop was due to the CPI data. This happened yesterday here. Then towards the end of the day, recovery. And it was the same story across board. So the reaction in gold was pretty easy. Gold made a big rally at the CPI data announcement. Then after the FOMC press conference, made a full recovery, or in this case, erased all the gains, and now we are seeing a break towards the lower side. So Brentwell had a big drop after the IEA data showed an increase in stock, but then the overall trend that we have seen over the last 7 days is Brent attempting to recover and continuing within this pattern towards the upper trend line, and that could be a key theme for the day. Then for the S&P 500, it was a break to a new all-time high. So even though there was the FOMC press conference, which indicated more hawkishness, the stock market did not take a step back much. So the drop is very small compared to the rally we had earlier in the day. It's the same story for the Nasdaq. So a big rally, slight drop and a continuation, whereas the Dow Jones is lagging behind. So after the big rally during the CPI, we had a complete reversal later in the day, and today we are seeing some further bearish momentum. So Bitcoin made a very strong recovery, got to around 70K. This was the highest price we saw yesterday, then dropped towards the end of the day after the FOMC, and now we are back to previous lows. So with that in mind, the big question for the day is, what do we trade today? Where are the opportunities and what should we focus on? So, as I've mentioned, one key thing to focus on is the USD trading against the Japanese yen, where we had all this drop. So, I'll try and remove all these previous analysis. Of course, now we have new information. So, we have seen the Bank of Japan intervene in the currency market at 160.188. Then the other intervention happened at around 157.718. Then we had this other drop and this other drop, and now a key theme is emerging, and it's not difficult to see. You can see there's some form of support coming in along these areas here. So it basically shows that investors are more willing to buy whenever the market gets closer to this trend line. So looking at this, we have seen the drop here, the drop here. And every time the market gets close to this trend line, there's a nice bounce. And then there seems to be a very strong resistance around 157.718. And of course, the strongest resistance would likely be 160.188. So the market is consistently pushing higher. And of course, we have the Bank of Japan rate decision tomorrow. So this is what we are looking at. So yes, we had this trend line coming up, it was broken, and now I don't think it makes sense to use this high anymore because we have a sequence of more highs. And now if you adjust to this level here, you'll notice that for the last 3 days, the market has been finding resistance almost along this same trend line. And now the market is testing that trend line. So in this case, there's still more room for upside potential for the dollar against the yen. But then the key idea is that the market breaks this trend line. So the market has not broken the trend line yet. So it's a wait and see kind of scenario. And if there's a break, then we continue trading higher. Of course, we observe the price action here. If the market makes a strong reversal, similar to the last 2 days, then we might consider going for short selling positions. But on this case, following the FOMC news, I'll be more inclined to looking for a bullish position rather than a bearish position. And of course, look to exit before the next Bank of Japan meeting, which will be happening tomorrow early in the morning. So that's one of the assets to consider. But then what's currently happening with European equities, especially after the elections that happened over the weekend? So we have seen this trend being maintained, and this is 4 straight weeks, today being the 5th week. The German DAX is still weakening. So we saw a big drop. Yes, we had a new low earlier this week, and then the market bounced off, and now it's moving back downwards. So in this case, I would be very bearish on European equities, expecting the trend to continue. In the last 2 hours, we have seen an attempt to reverse yesterday's move. So yesterday's move was in line with the CPI. So while the American equities were making a big rally, also European equities are also making a big rally in correlation. But now we are seeing the market erasing yesterday's gains. So I would be more inclined to be looking for short selling positions with a target around 18,375 per share for the German DAX. So for the FTSE or the UK 100 index, which is the benchmark index for the UK stock market, I should be expecting to see some further downside momentum. Of course, after the bounce yesterday, we are not expecting much of a big sell-off. But for today, it seems more likely that the market could be headed for this previous bottom around the 8,138 price level. So this would be playable for the day. So the French 40 stock market index, especially after the turmoil and the dissolution of the French parliament, rumors of the French president resigning. There's a lot happening in France lately. Also rumors of Brexit starting to fly around. And there's this likelihood that we continue seeing the stock market tanking. So from the forward chart, you can see we had a big break here. So more bearish momentum is expected. And of course, we talked yesterday about this setup, where the market makes a break, retests the area and continues. So another pullback and a continuation, in this case, increasing the likelihood that the market keeps tanking downwards. Whereas for the Euro 50 cash index, we expected this drop here. Eventually, the market bounced at the same exact spot that we had identified. This was the bouncing point. Then after the pullback yesterday, today we are seeing some further bearish momentum. So the idea is still playable that the European Euro stocks cash index continues dropping with a target of 4,940. So this seems likely to happen today. So for the Spanish IBEX, this is what we had on the 1 hour chart. We had this trend line, market broke, retested, and continued. Got to our target. I remember when we analyzed this on Monday, we were looking at this area here. So market got to this area, made a strong bounce, went all the way up, found some resistance here yesterday, and now we are seeing a continuation further downwards. Of course, the immediate target becomes the weekly low, which is 11,107. So this seems like a likely area to explore for opportunities for the day. So the dollar trading against the Turkish lira got to our target last week, then pulled back downwards and then up and then down. And now that we are seeing the Fed being very strong, yes, the market is still in a range. So in this case, I would be observing this area here for potential entry points. So the idea of trading these charts for the Turkish lira is when the market gets to support and start looking for bullish positions rather than looking for short selling positions. So CAD JPY also making a comeback. So it seems like the Japanese yen is weak across board. So after finding support here, the market is testing yesterday's high and looking to print a new weekly high. Of course, the next target will be 114.801. So we should be looking at the market potentially getting there. So if you're still holding a bullish position, this might be a likely exit point. So high-grade copper futures maintain the same bearish momentum. So we haven't broken out yet. So if I want to do this and try to show you what's happening. So there seems to be a likely momentum playing around these areas here. And the market has not yet found a way of breaking out of this formation. But then there are key highlights to be observed. So this being the 4 hour chart, if you go to the 1 hour chart, then you notice that this week, Monday, Tuesday, Wednesday, and Thursday, we haven't seen the market forming new lows, which is a red flag, basically telling you that the bearish momentum might be coming to an end. So the highs we have seen this week. So Monday, Tuesday here, and Wednesday here, the market is literally forming higher highs. If you look at the lows of Tuesday and today, it seems more likely that the market is weakening. So it doesn't mean that it's an outright look for a bullish position, but then I would be more observant of the upper trend line to see when the market eventually breaks the upper trend line. And in this case, if there's a break, then potentially look for bullish positions. So NVIDIA still trading sideways. Charts still not very good, but we saw a big jump yesterday. Market kept trading higher, so there's still more room for upside momentum. We have already seen Bitcoin made the rally and then the pullback. So for Bitcoin, it seems like the goose is cooked, not likely to be as bullish today. So if I was to remove all these previous analyses that we used to identify the breakout, then we could have a more clearer picture. So this is the high we saw here, also the high here. And now we had a support area holding along these lines. So notice how Bitcoin would move up and then down, up, down, up, down. An attempt to break yesterday which failed, then a rally up. So it seems more likely that Bitcoin is more sideways than trending. So I would say these are 4-week sideways momentum where the average price action is just moving this way. So of course, looking for buys is more likely to be fruitful if you are considering the lower side. So levels around 67,136 seems tenable for looking for bullish positions compared to the upper side. So US equity indices already made their move, but the Dow is already making some steps backwards. So in this case, more bearish momentum is expected after breaking this trend line here. So I will show you. This was the 4-hour chart. Market made a break. We expected a drop to this area. Didn't drop quite well. So after the news, there was a big rally, got to previous resistance, and then a big drop, meaning that now we don't have a new high, but we have a new low, which means that it's likely that the Dow continues being bearish for the day, and the potential target point is the lowest price we saw on Tuesday. So there's still more room for downside momentum here, especially considering that the Fed went all hawkish, and holding rates higher for longer is not good for the stock market. So Nasdaq still being driven by top tech stocks. So in this case, we are seeing more momentum upside, with Apple and Nvidia being major contributors to the rally. Also, not Tesla doing well. So with these new all-time highs, it doesn't make any sense to be looking for a short selling position. So as the theme for the Nasdaq this year has been, is that anytime we see bullish momentum, we continue with that trend. But then if the market decides to pull back downwards, then we still look for more bullish position. So the one mistake you could have done over the last 2 years is to be looking for short selling positions in the Nasdaq. So in this case, the tech-driven rally is expected to continue, but in case we get a pullback, then more opportunity for more longs. Same as the Nasdaq. So Brent oil seemingly likely to be moving sideways for a while, but we should be looking for evidence that there's bullish momentum. If we find that evidence, then it should be an idea to go long. So if I remove this triangle here, just to make the chart clearer, from the 1-hour chart, this is what we have had. So this is 7 consecutive days of bullish momentum. So even after the sell-off yesterday, the market still closed at a positive. So in this case, a potential value area could be around this area here, where we should be expecting to see something similar to a market retesting the trend line and then finding momentum and moving higher. So Brent oil is still on a bullish trajectory despite the weekly crude oil inventories. So in this case, a bounce from this area might make sense. So gold, we had this break happening here, and with the dollar making a very strong recovery, all the gains we had made here were erased towards the end of the day. So today we had a breakout of this trend line. It's the weekly trend line. So this week, from Monday, we have had this acting as support. So there was a break, and now we are looking at a potential retest, and now we are looking for evidence of more volume showing sellers entering the market. So if we see more evidence, the candlesticks are not yet indicative of strong bearish momentum. But then if we happen to see that, then the base of the pattern is here. So around 2287 might be the target. So if we see more evidence of bearish momentum, the idea is to go short. Target 2299. This is around 2300. Of course, if the market breaks, then further downside potential towards 2287. So silver, as I had mentioned a few days ago, majority of retail traders were extremely bullish on silver, and what we saw after that was the market trapping out of retail traders with attempts to move higher. But in every time we have seen the market attempt to move up, the market has pushed further downwards and remained very steady along this lower trend line. So yes, we had the nice rally here, and the market erased all the gains this morning, and there's still more evidence of bearish momentum. So we should be looking at potentially further bearish momentum. So we had this double top formation, the neckline here. Market broke the neckline, went up and didn't quite get to the previous high, which indicates now we have a trend of lower highs and lower lows. And then the recent attempts by the price to move up have all from here. So with that in mind, we also have our USD. Of course, the big rally yesterday followed by erasing of those gains. So we expect the dollar to continue being strong. So potentially further downside momentum, perhaps to the base of yesterday's beginning. This is where the action started. So we could be seeing the market gradually dropping and eventually getting to the base of this as the dollar recovers. Then for the USD card, it's a classical pattern. So we had estimated that the market would continue with this break and eventually get to the top of this pattern at 1.38344. But then what we are seeing here is the classical chart pattern we have been talking about this week. Market making a break, pulling back, retesting, and then continuing in the same direction. So it's a classical book pattern that plays out almost every time, and now it's playing out again. So dollar continue gaining against Canadian dollar. So for the UK pound, we saw the strong rally happening yesterday, but now we have seen the dollar attempting to recover. So yes, this was a major resistance area, broken twice, in this case towards the upper side and towards the downside. So potentially, if the pound remains strong for this session, we could be seeing some retest of this area and perhaps a continuation further downwards. So as always, remember, sometimes I'm extremely wrong on these projections. So you should take all these with a grain of salt. Nobody is perfect and always predicts the markets right. So always do further analysis to identify whether it's the right idea for you. Of course, you can do further research to identify potential entry and exit points. So also at the same time, when we are doing these sessions, it doesn't mean that at 11 a.m. is the best time to make market entries. It's only understanding the market structure so you can identify where to set your positions. So now on the questions, I'll be looking at potential questions. I see Shadrach Onyango in the house. Welcome. Grief Aruda, thank you for joining. Joseph Gisharu, I already addressed your question. There's a question on how to access reliable EAs from Grief. I don't know. I don't have any reliable EAs that I would off the mind recommend. So this would be on you to research further. So I'm seeing this is an account title of Sports TV. Hi, the CPI data released yesterday and Powell's presser indicated a very healthy economy, which is supposed to make the USD very strong against other currencies. Why isn't USD that strong, especially against the euro? So sometimes it's not immediate. Markets sometimes take time to process the information. So yes, dollar strength is the key expected theme. It might take a while before we see the full extent of the dollar strength being felt in the market. So just take it gradually. So despite the volatility yesterday, yes, a lot of investors expected an immediate reversal towards the previous number. But right now, I think it makes more sense to just chill it out and let it play out and gradually trade the positive dollar. I don't think you are late, Robert. Just make sure to rewatch the video after this. It will be available on YouTube as well as on FX Pesa Twitter as well as my personal handle. Another one, what is driving the strength in euro and CAD, bearing in mind that they cut interest rates? So they both strengthened as a result of the inflation report yesterday against the inflation report in the US. Inflation surprisingly dropped to 3.3%. So the dollar was the one that was weakening. It's not like the Canadian dollar and the euro are strengthening. So remember, these two currencies are priced against the dollar. So if the dollar is weak, it may appear like they are gaining, but in real sense, is the market reacting to the CPI news. So while the Fed supported the dollar by being hawkish and expecting to hold rates higher for longer, then in that case, we should be seeing gradual recovery of the dollar against these other currencies. So hello, Smith FX. Thank you for joining the session. A quick question, if I have an account of $700, I've been in the markets, what size of lot do you recommend? Usually accounts around $500, I recommend you trade 0.01, be conservative, and as you trade 0.01, try holding your trades for longer, and you might realize that the small risk you take gives you some nice rewards without giving you sleepless nights. Don't make the mistake of going for bigger lot sizes because it's highly likely that you'll be losing the account. So just be conservative and focus on the percentages. So while I know out of Kenyan traders tend to look at how they can double $700 to $1,400, it's more about the skill. The markets are not going anywhere. So if you learn how to make, let's say, a 10%, 5% a month return, then you can work on the balance and find a way of having a bigger balance where 5, 10% a month makes a lot of sense to you as a trader. So a question from Nahashon, referring to yesterday's FOMC statement, does it mean the long-term buyers for maybe this month bullish for the dollar? Of course, yes. An astounding yes. Are you still bearish on the Dow? Yes. There's a question on USD against the MXN. I haven't checked that lately. I only checked during the elections week. So we could be checking to see what happened. So dollar still continues to gain against the Mexican peso, especially after the recent elections. So strong bullish momentum, of course, from the daily chart. This is how it looks like. So it seems like a major reversal of the currency. So looking at the daily chart from back in 2021, the overall trend has been bearish momentum. And of course, if you look at the major or the key trend line here, it seems like we have had a major breakout. And with this major breakout after several years, it only implies that we could be seeing some further upside momentum. And of course, be aware that the classical chart pattern we talked about of a breakout retest continuation, but with the short-term intraday trades indicating very small tolerance for pullbacks. So every time we are seeing pullbacks in this market, buyers are coming in to squeeze and push the prices higher. So that could be a key theme for the day. So BTC breakout imminent, largely in the CC for now. Yes, thank you, Norbert. What I'm seeing is a sideways momentum, as I've discussed earlier in the session. So it doesn't seem at all likely that we are having a breakout on the lower end. But then also it's important to note that this 3-week range is finding support around $67,000. So potentially, if you are to do, sometimes I like this indicator called a zigzag. I'll just show you quickly. So it's not an indicator for entry or in the market, So right now, it seems more likely that we are headed for another swing upwards. So when you observe these swings, then you know that we could potentially be facing yet one more swing where the market now heads towards the upper trend line. So there's a comment from Tony Dark, Day Trading Africa. So in light of their more hawkish tone yesterday, do you believe the Fed members have decided to overlook the gains in inflation prints over the past 2 months? This is a real nice question. What we have seen with US inflation, it's not the first time that the Fed inflation had dropped to that level. So you should understand the underlying data. Don't know if I should share these. Let's look at the charts on Forex Factory. So I will share the chart right now. So from Forex Factory, this is what we have. So this is CPI year over year. We saw the 9.1% as the highest inflation rate in July 2022. Then inflation started dropping and got to a record low of 3%. So this is the lowest that we got, and this was in July last year. And since then, inflation has remained steady. So it's more similar to what I would describe as stagflation. So inflation remaining at 3%, moving higher, getting to around 3.6, then dropping. So it has been a steady momentum around 3%, but it's not making any reasonable gain towards the 2% target. So despite seeing the low of 3% in July last year, we're already in June. So getting to July is what? About 27 days from now, and that would be a whole year where inflation has remained above 3%, which means that it's a tougher job for the Fed to push the extra drop from 3.3 to 2% compared to when they were dropping from 9.1% down to 3%. So it's still a tough job, and this screams over stagflation. So it's still a tough job for the Fed to achieve the inflation target. So there's one more question here. Does the NFP CPI news drive the market for the remaining month till the next one, or how long does it last? So think about it this way. When trading, we are observing in this case, we are observing the Federal Reserve as the key decision maker that brings about the major trends in the dollar, where if the Federal Reserve is hiking interest rates, the dollar strengthens on the long run. If it's cutting interest rates, then the dollar weakens on the long run. So the non-farm payrolls, as well as the consumer price index, are two data points that the Fed observes in the economy to make decisions about monetary policy, which includes hiking or cutting interest rates, or even holding as they did yesterday. So the jobs data, as mentioned by the Federal Reserve Chair Jerome Powell last night, is more indicative that the US economy is currently very strong. The job market is healthy, meaning that unemployment is close to all-time lows. And of course, at the same time, the CPI shows that the Fed is failing in the job of getting inflation back towards the 2% target. So there's still more work to be done to get inflation back to the 2% target. So while we are trading and following the Fed, we try to understand the data and the trends we are seeing in the data. So in this case, the Fed comments last night are more impactful in the markets compared to the CPI or the NFP news. However, we'll continue observing the next CPI data next month. We'll observe the non-farm payrolls next month and try to understand what direction these data points are moving and how they might influence the next Fed decision. So far, we're expecting just one rate cut, which means that interest rates still remain significantly high in the US, which is quite positive for the dollar. So that's the last question I'm answering today. Apologies for everyone. We normally take about 30 minutes. Today we have taken about 50 minutes. So if you are very new to trading, make sure to check out the Novice to Pro series, which is a course with 10 episodes available on FX Pesa YouTube to help you begin your trading journey. And of course, if you are looking to register for a trading account, it's free and online. Check the links in the description below on the FX Pesa YouTube. And if you're watching these on Twitter, just check out the FX Pesa Twitter handle. And from there, you'll find the links to register for an account. And if you have any questions, feel free to reach out and I'll be responding directly. So thank you very much, guys. Thank you for your time. I appreciate you and I hope to see you on the next session. So one more point before we end. We have a new episode of the Bullish Banter podcast available on all podcast platforms. And of course, yet one more episode on the Financially Incorrect podcast. So make sure to check that out.